there is a large group of people out there who is just hoarding cash and they are terrified to enter the stock market. They are scared because they think that if they enter the market, the stocks they choose might get their floors taken out because of this AI bubble that we might be in. And if you are looking at stocks like MU, which is down about 30% from the top, or SanDisk, which is also down about 30% from the top, then you are wise, my friend. But you cannot be sitting on too much cash and on the sidelines while we're going through one of the most amazing bull mania of our times, right? So before I walk you through these three different stocks that I recommend that you park your money into, I do want to suggest one thing. If you haven't already started investing into a long-term account where you are investing every month into an ETF like VU or something that is correlated with SPY, then you are missing out. I would highly suggest you invest into a long-term account for 20, 30, 40 years and let that compound over time. And all of these bull and bear markets will just be a blip on your radar when you look back. That is the one strategy that has worked for over 100 years, and you do not need any knowledge for it. You just need to consistently invest month over month for the long term. So with that said, let's get started with the first stock I want to go over, which is Pfizer. If we look at the Pfizer chart, let's sketch this back all the way to when they first IPO'd. The stock price is sitting at the price range of 2013 to 2012 levels. Now, we know why the stock is down. A lot of their patents are expiring in the next coming years, and the market is just pricing that in. But I also believe that the market has priced that in, and a company as big as Pfizer, this is a company that is essential to America and essential to the world. They cannot be going out of business. They have been in business for so many decades now, right? They are what you call is too big to fail. So what I've noticed is that the price has been hovering around the range of $21 to $25, $26 for quite a long time now. We're looking at almost a 2-year consolidation, and we are also way below its 200 weekly moving average. And I think that it is time that Pfizer figures their stuff out, that Pfizer finally reverses out of this range. You can also say that we are creating this inverse head and shoulder pattern where this is the left shoulder, the head, and then the right shoulder. I'm not saying that this stock will reverse tomorrow, but I do think that on the long run, for example, 2 to 5 years, that's not even that long when it comes to stock market, but in 2 to 5 years the stock will probably higher than it is right now. I have done the math, and I think the intrinsic value for the stock is about $35. So we have about 35 to 40% upside from here. So if you are stock picking and you don't want to touch any of the AI stocks, you want to invest into something that is too big to fail, Pfizer is the stock for you. And lastly, the cherry on top is that they do give you a 7% dividend, which is one of the highest ones in the marketplace. So even if your money goes sideways or maybe goes up by 4 or 5% a year, you're still getting that nice 7% dividend to just hold the stock. And another question I want to ask is, could we go lower from here? Maybe. If they cut their dividend, we might see another flush lower. But at the end of the day, the company is too big to fail, and I hope that they get new patents, they acquire new companies, and they figure their stuff out, and the stock reverses back up. The next stock I want to talk about is Kimberly-Clark. They are also a pretty big company, too big to fail, in business for too many decades now. And let me zoom out here a little bit more. Kimberly-Clark has had a very nice long consolidation period between 1998 to 2011. That's more than a decade. Notice that we kept bouncing in this range for a long time until we finally broke above it, and then we provided, I think, gains of about, let's see, from the lows, this impulse move was about 215%, right? And I feel like we're going through the similar phase right now. We've been consolidating in this range on Kimberly-Clark for a long time now. This goes back from 2013 all the way to where we are now at 2026. So 13 years of consolidation just sideways on a business that is pretty solid. We're not just below the 200 weekly moving average, we're also below the 200 monthly moving average. We're kind of retesting it right now. And if you want to invest into a company that is, again, too big to fail, will probably just keep selling with their products and improve efficiencies with AI. So I believe that KMB will start making its way back up from here. Maybe we consolidate here down and then up and then sideways and then upwards. But overall, goes back to what I said. If you want to park your money somewhere, this might be the stock for it. And another thing I noticed is that we did sweep the previous lows of 2018. And that is a really good thing because we just created an area for institutional buyers to come in. And the biggest reason I believe that KMB will continue to go higher is because in last 10 years, we have had so much inflation and the stock price it remains the same. But the product prices have gone up. I think that after this sweep, after this proper pullback, let's look at the weekly chart as well. After this proper pullback, I believe that we will continue to price that in and start making our way back up. And maybe once we break 150, we might see us making another impulse wave towards 200 or something. And lastly, they do provide a 3.2% dividend, which is great because you get paid to just hold their stock, right? The next one I want to talk about is HSY, Hershey's Corporation. Who doesn't like chocolates, right? I believe that this stock will probably do great over time. Let's zoom out to the monthly chart to see how it has been trending up. I do like the trend up. What I don't like on the monthly chart is this trend line. I'm not a big fan of trend lines because I do believe that they eventually do break down. And this has been a very long one, which means that if we do break down, we might come down here and then eventually make our way back up. But that's just me being a bear at heart. Overall, if we zoom in and just go to the weekly chart, getting a company as good as Hershey's on a 38, 37% discount, not a bad entry in my opinion. So if you're looking to stay away from AI names, stay away from hyped names, and you want, again, a company that is too big to fail, Hershey's might be the stock for you. I know it tried to break out once and it's giving another opportunity for entry. Maybe you take advantage of it, maybe you don't. But another thing, HSY gives you a 3.2% dividend to hold their stock. And I think I accidentally said KMB gives you 3.2%, but KMB, Kimberly-Clark, gives you 4.8% dividend, and Hershey's gives you 3.2%. So it's the lowest on the dividend yield, but overall still a solid company. As you can see, we are below the 200 weekly moving average. So let me close with this. On the long run, you are going to win if you just invest into low cost ETFs and just live your life, make a lot of money at work and enjoy. Spend everything else because you're already funding your retirement accounts. And that formula can't go wrong. But if you do choose to stock pick, be careful. And these are the companies that are in the lower side of risk. So do your fundamental research, find a good place to enter, and then park your money and walk away. With that said, I hope you found value in this video. Please leave a like, subscribe to the channel, and I'll catch you on the next one.